The biggest mistake you can make in the midterm rental B2B space is the failure to collaborate with other businesses. My name is Ruben Kanya. I'm a temporary housing specialist where I help investors nationwide land the most lucrative contracts by specifically working in the B2B, specifically with a niche in insurance. And that's the business to business sector of temporary housing, aka midterm rentals. So, what is the difference, I should say, between relocation companies versus temporary housing providers? And why is it important that you know the difference? Is because we are fundamentally shifting the way you look at the marketplace. Whereas if you used to be or are coming from the world of short term rentals, you are used to actually applying what have coined in the industry the enemy method, how to compete on price, how to look at the amenities and compare and add, etc. And essentially what you're doing is you are faced with competition in your zip code. Meanwhile, on the midterm rental temporary housing side of the world, going business to business, you are actually collaborating instead of competing. So if you stop competing and start collaborating, you're actually going to fast track your growth. Now, what I want to actually highlight in this video are two very important distinctions between who you actually might be collaborating with on the other side. And the reason it matters is it will help you at least identify who the real decision maker is, what are the dependencies, so that you can actually forecast that into your decisions, your lead time, etc. Because not all midterm rental B2B housing relationships are created equal. And most importantly, it's still, for what it's worth, important for you to know who is who. So, what is a relocation company and what is the difference between a relocation company and temporary housing provider? Well, the truth is, a relocation company owns zero inventory and actually has relationship in which, in our case, is with the end user, or at least the need is coming from it. And for us, it's these insurance companies, right? These insurance companies who are looking to relocate families due to unforeseen events that have happened to their policyholders, which again, the policyholders pay their insurance company to step in when required. Unforeseen event could be anything of a flood, it could be water damage, it could be pipes bursting, it could be a tree falling on a home, it could be a fire, anything of that nature. The policyholder is now eligible to actually receive additional living expenses, and these relocation companies partner with these insurance companies to source inventory, source the actual supply of homes, whether it's hotels, whether it's single family homes, which you might be watching this, whether it's apartments. They are sourcing inventory for those individuals. And so it's important that you understand who is on the other side when you actually get an inquiry, because yes, there are all these big corporations that we've heard of on the relocation side. If you've watched my channel, like the Ailey Solutions and the Alacrity Solutions and the Sedgwicks and the CRSs, those companies you've heard of. But there are multiple other tier 2 companies that you may or may not have heard of that are local to your marketplace and just as valuable, if not even more valuable, because you can actually foster a key relationship with these companies. But you need to understand who they are and who they are not. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it, and continue on with the gems in this video. A relocation company is not a temporary housing provider. A relocation company typically work with temporary housing providers. Now, temporary housing providers either own their properties, they either control their properties, which means that they have other owners that they have control over those properties. Either they have a written agreement where they say, hey, if I bring you a deal, I'll be able to foster it because I have the relationships, which again, I highly encourage, or they're property managers. And hopefully, if you're watching this, you are a property manager who is actually going to be savvy and flexible and be able to work business to business, because the truth is a majority of these property management companies are actually leaving a lot a lot of money on the table by not being flexible and being by the book and traditional, and only wanting 12-month leases, and wanting to do these background checks, and wanting to the tenant to actually be the applicant and all that is out the door when it comes to business, because we need to move quickly and understand that the business often is taking on a master lease on behalf of the tenant, and the tenant is not the actual one paying for it. So if you're going to go through the whole application and all of that, that's going to slow things down, and that's not going to be a good fit. If you're also watching this, you could be a co-host, you could be in the short-term rental world, and you want to tap into this, longer term stays, right? Longer than shorter term stays, but shorter than those longer term 12-month stays. And that's where you come in as a midterm rental operator. Now, if you're a midterm rental operator, you fall, so let me just say it again: co-host, property management, owner, of course, Airbnb host, could be a property manager. You fall under the bucket, or I should say, you fall under the umbrella of being a temporary housing provider. You're a provider if you own, you're a provider if you arbitrage, you're a provider if you co-host, you're a provider if you have anything where you actually have control in this inventory. And that's a key word, because in this space you'll see a lot of temporary housing providers who have control, rightfully so, of the properties, and therefore are able to offer them to other either relocation companies or other temporary housing providers. Remember, it's collaborative, which means that if you're a temporary housing provider, aka you have control, aka you own the properties, and a relocation company reaches out to you and you don't have any inventory, there's a good chance you might reach out to another temporary housing provider that may be able to actually provide the inventory. Now, if that's the case, you might now have two agreements. These two companies can have an agreement to be able to serve the relocation company. And so what happens is there's layering that happens in the industry, which is completely kosher. And a lot of these businesses are doing it the right way. Some businesses are doing it the wrong way. So it's still important that you do your due diligence, look up the team, look up, do they have a website? Do they have an email with a domain name that matches? Are they not just someone who's just jumping on an opportunity to arbitrage and don't really have control? It's really important that you understand if that company has control or not. But if they do not be hesitant to work with them, because there's a lot of tier 2 / even tier 3 companies who are just playing the multiple tiers, middleman business, middlewoman business, and they are still in fact able to make these transactions go through, only for the simple fact of the matter is that they just don't have the inventory, or they're limited, or one that would be available got extended, and therefore they're able to source with either other owners, operators that they have control over, or even other businesses that they can introduce you with. Now, on the back end, which I won't get too much into, is you can do referral business amongst other businesses as well, and or sometimes they may even layer their master lease agreements on top of the other company if they have a good relationship with them. So do not be afraid of doing business with another company that you have never seen their name before. But it's, for what it's worth, it's important to still do your due diligence, look up their website, look up their information, get an understanding, and let them know, hey, you're open to working with multiple tiered businesses because you understand the model. You're not sketched out by any means, but it's important for them to disclose that ahead of time, that if they're going to be working with another business and they don't have full control, that gives you an understanding of where are you actually going to get the decision making from? Where do you actually get response communication from? Are they dependent on another third party or even fourth party, for lack of better words, to get an approval before it comes back to you? Getting that expectation is going to need to be very important, because there's multiple layers involved. Relocation companies have the demand that comes from the insurance companies. Relocation companies work with other temporary housing providers, and there's a good chance that the temporary housing provider might work with another temporary housing provider. And that, in our world of, again, the old world of short-term, no, I shouldn't say the old world, the other world of short-term rentals is more competition, and in this world it's more collaboration. But it's important that you still do your due diligence on who you're collaborating with, and not confuse the difference between working with a relocation company that probably has a direct relationship with the actual policyholder insurance company versus with another temporary housing provider that could also be working with another temporary housing provider. And the layers don't end. Honestly, I've seen them all. And by the way, it's just important for you to understand who the dependencies are, who the decision makers are. And we often in industry We don't ask how much the other companies are making as long as you get your cut. And that's actually something that I learned in the staffing agency world. As you know, my background was management consultant, corporate world. I did some stuff on Wall Street. I've done some stuff in the finance, broker dealer, IT, tech, different management consulting verticals. And there was always a end client, which is the one that's actually receiving service, and then there's also the middle tier individuals that actually helped you land the contract. And so I'm very familiar with this world, and it's something that's maybe a little bit newer to individuals who have never worked in that world. And I want to let you know that it's completely normal. Middleman businesses actually are always very profitable because they either have the relationship, and this is why I always say it's always important for you to focus on the contact, even with other operators in your community, than it is for you to focus on the contract, because the right contact can get you in front of multiple contracts. And if you are on the receiving end, it's important for you to be able to distinguish between who is what is who and which is what, because just so that you can set your expectations on the level of communication, response time, background. I mean, there's a lot of approvals that need to happen along the way, and most importantly, liability and due diligence. It's important that you do that up front so that you know what risks you may be facing, especially when working with a newer company. So I encourage you to work with other businesses, other companies, but I also encourage you to do your own due diligence and understand that there's a difference between being a relocation company and a temporary housing provider. If you got value from this video, make sure you check out my video called the best midterm rental strategy you probably aren't using.